Alright guys, welcome back to Only Divergences. In this channel, we take a strict technical analysis approach to looking at stocks and the stock market. If that's what you're into, then subscribe, take a look at some of my past videos. Today is Sunday, November 21st, 2021. This will be my only public video today, and I will be going over the S&P 500 from two perspectives. First, I'm going to outline the potential trade in the coming week or weeks. 2 weeks. This has to happen within 2 weeks, otherwise it's not going to happen. We've been discussing this trade based on an analog for some time. We've been tracking it, so if you've been watching my videos, you know exactly what I'm going to be pointing out today. Second, I will outline a long-term picture of this index and look at when we can reasonably expect a top or at least the next real material pullback. And again, I'm talking about more than 5%. If you are bullish, you will probably want to stick around because the long-term target is up there. Anyways, the principles that I use are always the same. It's pattern recognition. Okay, we look at patterns in the past and we make reasonable assumptions and inferences and extrapolations about those patterns repeating in the future based on probabilities. Really simple, guys. So first, we will take a look at a potential move or trade that may be coming, and we've been watching this like a lion stalking a gazelle. But I have to say one thing, I didn't even consider or realize that this week it's Thanksgiving in the United States. And as a result, not only do we have a shortened trading week, with I think no trades, I think the market's closed on Thursday, and then I think it's limited trading on Wednesday or Friday. But if you've been in this game for a while, you know usually volume tapers off as everyone leaves to go visit their families and do the whole, Thanksgiving, Black Friday thing. So generally markets are somewhat calm. I think that's not always the case, but this is just, I feel that this has thrown a wrench into this trade idea to some extent, but we're going to see if we can get over that. Now that said, let's take a look at the analog. So let's just put this side by side here because that's how I like to look at this. Let's expand this out here. So here we go. The current move is on the right. The analog is on the left. We can see here that in the current move, price remains above the 5-day exponential moving average and the 10-day as well. That's significant because we've touched it a few times. The MACD has started to flip negative. You can see red showing here. That's what we're looking for. Yep. And we can see that the DMI has this green indicator coming down, which again, everything is coming in line with the analog that we have back here. So we are assuming continued correlation generally between these two patterns. And therefore, we can assume that at some point in the near future, we should expect a move lower, either to the 20-day moving average. Like, take a look at the analog, right? So this green line here is the 20-day exponential moving average, or the 50-day exponential moving average. So in the analog, we had a thrust, came down to the 10, stayed above it, came down to the 20, bounced, came down to the 50, 50, and then bounced, right? And so here we have the same thing, thrust, came down to the 10, above, and so what we're anticipating in the coming week and weeks is a move to the 20, so down here, somewhere like this, and then eventually a move to the 50, right? And again, this is just a falsifiable hypothesis. I'm not putting any money into this just yet, at least. But again, I hope that you can appreciate the argument that's being made here. If you disagree with it, then yeah, tell me why in the comments. I'm always interested in seeing different perspectives, especially if they are based on, facts and numbers, like what we're doing here, analogs, basically. So that's a bit of a lower resolution view. This just an assumption that at some point we're going to get down to the 20 here, and then at some point we're going to get down to the 50. But with that daily outline established, I think we want to go down to the hourly here and just compare the current move in the hourly to the analog as well, so that we can get a bit more higher resolution, a bit more definition with regards to what type of moves we can expect. So give me a second here. So just looking at price, right? Just look at the price relative to the moving averages. We can see the similarities, right? So in the analog, we got a low below this flattening 200 period exponential moving average that marked the low, and then we had a big thrust, similar here, big thrust, Then after the big thrust, we eventually did return to the 50 period EMA here, tried to get to the 100, the green couldn't get to it. We bounced twice here, so we had this and then this, so that is different from here. But again, here we had the same thing, right? We move higher, come down to the 50, try to get to the 100, couldn't get it, and then proceeded higher. So if we're looking at that, where are we right now? Well, it looks like, after the bounce to the 50, after the pullback to the 50 and the bounce, we should be somewhere right here, right? That's what it's like, right? We have the bounce, come back to the previous high that was here, right? Here we made a marginal new high, but like a penny or something, but we're basically here, right? Now we have to admit that the MACD, let me just pull this here a little bit. The MACD is not the exact same, but we do see we had this initial thrust here, kind of a bit of a momentum consolidation before a second thrust that came down. Similar here, initial thrust here, a little consolidation, a bit of a weaker thrust, I'll admit that. But then it came down to the midline here, had this pullback and support, and then continued higher. Same here, came down to the midline. Again, I want to emphasize that there are differences. You're not going to get analogs that are perfect, especially on lower level time frames. It's a bit easier on the higher time frames because it's lower resolution, but the lower level time, the lower you go in terms of the time frames, the higher resolution it is, and the more nuanced the analog becomes. Now, the thing that I want to point out again here, take a look at the price is basically, we closed on Friday basically where we were at the beginning of November, right? Here, similar to what happened in this analog, right? We hit a thrust high here, and then we just kind of came down, up, and just traded sideways for a long time. The analog is actually rather remarkable, right? And I hope that if you're watching, you can appreciate this and appreciate why we've continued to follow the analog, because it just keeps telling us that this is generally what we can expect from the market, right? And it'll keep doing that until it doesn't, right? We can also see the DMI here, this indicator, my favorite indicator. Initially, we had these thrusts. So one thrust here with elevated black, second thrust with the elevated black, and since then it's come down. Now, one thing that we can distinguish between the current move and the analog is that you can see here, we just had basically one big thrust, right? Yeah, we can say that this was a bit of an overshoot thrust here, but on the DMI, it's not the exact same. So here, generally, we've got like one big thrust before coming down here. Again, always looking at the other side of the argument, right? In terms of, we're not just looking at how it's similar, we have to look at how it's different so that we don't get married to these ideas. Now, what matters most is that black, this indicator here, which is the trend strength indicator, in the analog, it was coming down. And that makes sense, right? Because if price has stayed at the same level for 2 or 3 weeks, then that means that the trend is not strong. And that's what we're seeing here as well. Black coming down here, indicating a lack of trend strength. Now, what's important is that we don't want to jump the gun. And what I mean by that is, take a look at this, right? So black came down and in the analog here, and you can see that it actually stayed low for quite some time, right? A few days here, stayed low, came up a bit, and then came down here. And in our current move here, black has actually just hit a low, right? So what we would want to see is black remaining low for some time before we get a signal one way or another. So generally, I'm not looking to do anything on Monday, really, to be perfectly honest, or Tuesday, I think. As I said in my previous video on Friday, I think the move will come towards the end of the week, maybe towards the middle of the week, maybe Wednesday. But the fact that we have Thanksgiving again throws a potential wrench into this idea, but that doesn't mean that we want to throw away the analog. Now, in terms of this week, what I'm obviously talking about is just this. If we're following the analog, is just this move here, which isn't a big move, right? This is, if you take a look at it, let's say from 419 down to 412. That's 2%, less than 2% right there. Obviously, with options, that would return something north of 400 or 500%. But we're looking at this, but then we're also looking at this move here, right? So if we can catch this move, which is ideally the one I want, you're looking upwards of 15 times returns on near-term options. Now, of course, I'm talking about this move, but I'm also talking about this move. I wouldn't be surprised if on Wednesday or Friday we get a small move lower. I think that we will get some move lower this week, but I don't see it happening Monday or Tuesday. Maybe Tuesday would be a time to enter into a short position. But again, you have to understand that that's all you're going to get. If this is the move, if this is the analog that we're looking for, that's all you're going to get, right before you want to prepare for another move. And so if that's the case, I might even just not do anything this week, because ultimately as traders, we want to take advantage of bigger moves, and a move like this would be much more substantial than a simple move like this. Also, if we are short and we do get a move like this, well, you'd be able to go long right away, right? So you can flip it short and long, and that's what we talked about very briefly in the Friday video. And also note, we can go to the daily here. I'm just going to do it on this time frame. And you can see that in the analog, that big move went down to the 50-day EMA. So, if we do get something like that here with our current analog, it's tough to imagine, but 50-day EMA is down here at 455. If it's going to happen next week or the week after, then we would assume that this EMA moves up to maybe around 460, and then you can get a move from 475 down to 460. That's about 3%. That could be an interesting move. But again, what can we say about objective potential short entry? So let's go back, and here we are on the hourly. Now, if we want to focus only on this big move here, which, look, it's good enough to do that. Let's say we do get that sometime in the next 2 weeks. I think that any trader would be satisfied to catch a move like this and be able to catch it perfectly, right? So if we do only focus on this move here, what can we say? Well, this move came when we had persistent low black, right? But then we had this elevated red. So we have a deviation higher that is not supported by trend strength, right? Because black, the move in the red here, higher, was too strong for it to be a trend move, right? So this was not a trending move. This is what I call a deviation move, and it was only after it turned around that we saw black starting to rise with elevated green, meaning that it is a trending move, at least on this hourly time frame. And that's what you get. You get a nice big move in one direction. And that's what we're looking for. So in our current pattern, now that black is low, to be perfectly honest, I would be inclined to actually simply wait for an elevated red like this, a material elevated red like this. And obviously I want to see a MACD somewhere like this. I'm not going to, this type of a MACD pattern here is not one that I think would support a material move lower. So, we could get a move lower here, but I'm looking for the bigger move, and I'm comfortable to wait. And just so that we're perfectly clear in terms of a target, objectively, we want to see what we saw here, right? So if black gets up here really quick and red is down here and green is up here for a while, that's essentially the target that you're looking for. And even here you can see when you get green deviating too high, that's a target. So targets are always extremes, right? And again, we're talking about short-term stuff here. Now, personally, I continue to be amazed at how this analog is repeated relatively closely. Remember, guys, I've been developing this method for a long time, and I only now have felt strongly enough about it to bring it to the public. So I am just as shocked as you that it's working. But if we take an empirical approach, then there's not much else to say. Either it continues to work, or if it doesn't, we go back to the drawing board, and that's fine. We remain patient. And the reason we remain patient is that this type of a move that we're looking for, the one that we only really need one a month or even one a quarter, returns around 800% or more when executed the right way. Now, you always want to look at the other side of the argument. So one question I ask myself here is whether this looks like a place where the market will proceed higher. Right, on the daily, take a look at this. On the daily, this MACD looks really high, right? It looks so high that I have a hard time imagining a material sustained move higher from here. That doesn't mean the market won't be higher in a month or 2 months or 3 months. I'm talking about immediate moves right now based on what the market's telling us. So if the market has just had a big move higher like this, similar to big moves higher it's happened in the past, right? All along this bull market, all along this bullish trend, I would say, since it's starting to stall, the path of least resistance would be to the downside, at least to wash out weak hands and get us ready for the next leg higher. Okay, I hope that that's a sufficient qualifier for the bulls out there, because I know a lot of you are just perma bulls, and I that's fine. I hope everything goes up except for inflation. Now, because this video is going to be longer and we are taking a long look at many things, I just want to show you this analog. Let me pull up the hourly here again. I want to show you this analog in the after hours, the extended hours, and perhaps provide some context, right? So let's take a look at the extended hours. We've got the analog here on the left. I hope that you guys can understand this chart. Here, the blue represents pre-market and after hours trading. And so here we go. All right. So this is the analog on the left with the after hours included. And then this is the current move that we're in on the right with after hours included. And even here you can see the correlation between these moves quite a bit. You can see move above all the moving averages and then come back down to the 200 here, just barely touch it. Same thing that happened here, just barely touch it, come above. And so if the analog continues, what we can assume is that we get a little bit of volatility before we get the move lower that will cut through it. And look at the target here, right? It came down to the previous low. So if the analog continues again, we would expect some volatility at the beginning of the week, and then maybe a move down to here around 463 before we get a nice bounce. Now, one thing I'll say is that on the extended hours time frame, at least on the 1 hour, the signals are not as clear as I would want. So what I'm going to do here is I'm just going to take a look at the 4 hour here, right? And you can see it a bit better here on the 4 hour time frame. So now we can see things a little clearer, and again, the correlations remain very obvious. We got this big thrust here, and the first real pullback of the thrust in the analog came down to this blue 50-period exponential moving average. Same thing here, came down to the blue. We trade above it, so what can we assume if the analog continues? Well, we can assume, even take a look at the MACD here, very similar. But you can only see it looks a little stretched here because we got that big one. Yeah, see, as soon as you take out this big MACD here, which pushes the scales, this thrust looks very similar to this one. So big thrust, pull back, a little bit of another thrust, pull back, big thrust, pull back, a little bit of another thrust, pull back, and now we're here, right? We'll bounce off the midline, bounce off the midline. So we're basically right here, right? The only difference is that we don't have the DMI, elevated red, which is the bearish signal, right? Same here. We don't have this elevated red. We only have green here. So again, we got to manage our expectations and always be aware that the market is sending us signals at all times. And again, one thing to point out is black is just coming lower, whereas here black already kind of hit a low, bounced up, and then came low again, and that's where you wanted. That was the small short position here, right? The small little move here, which if you caught this properly, this was actually quite a big move with near-term options, and so it's possible that can happen here. We'll keep an eye on it. But if we do want to speculate just a little bit and go deeper into this, then what I'm thinking is there's a possibility maybe that we gap higher a little bit, maybe on Monday, come down, gap higher again on Tuesday, and then we get a nice move down Tuesday, and then Wednesday, same thing. So here it would be, move higher, and then Tuesday it's here, and then comes down to here. Seems kind of crazy, right? But that's what the analog suggests, right? And obviously, again, the target would be somewhere around here, similar to how that was targeted. And you got to be very, very careful because look how fast it bounced off of this, right? You've got minutes to get that. And also, you want to be conservative here, so don't go chasing for the last penny. I think that it's if we do get that, we're gonna come down and then bounce right back. And look how fast it bounced. Not only did it bounce back, but it bounced a lot higher. So don't, be very careful, I'd say, with regards to this. So, this isn't for everybody, right? So if this is not for you, then, just observe and watch. And again, as I always say, this is not financial advice. We're just looking at patterns here, right? And I know I do say, trade and all that, but I'm just using that language because it's easier to express the types of moves that this market can produce. That's all. It's just an easy expression with regards to that. So there you are. In terms of the analog, that's what I see happening here. Let me just pull back on the hourly. And again, you don't need a lot of these in the course of a year or a quarter or a month, right? If you get one or two of these a month, you can have a nice life and not need to be in front of the screen all the time, and that's really the goal. This is a marathon, not a sprint, so it's very important that you're dispassionate about moves like this. We will have other setups in the future, so don't mortgage the house, but make sure you subscribe, but only if this makes sense to you, right? Like, there's a lot of people who, if this doesn't make sense to you, then by all means, listen to other analysts. But if this makes sense to you, and you've been watching, and you've been looking at the rest of my videos, and you see how this stuff has continued to play out, then, then subscribe. All right, so now, moving on to my overall S&P 500 view. In terms of where are we going and what can we expect in terms of a long-term top. Now, I actually want to start with the VIX, okay, because that's a big indicator. We'll get rid of this line here first before we explore here. So, let's take a weekly look here. This is a big. We're talking about long-term stuff in the S&P 500, right? So we want to have a long-term view of how the market operates and how the VIX operates, because the VIX is a barometer for fear. And the first thing that I want to point out is that the VIX behaves in a specific way. Okay, it consolidates, and then it releases. And then it consolidates, and then it releases. Consolidates, and then it releases. Right, this goes all the way back here. This was the 08 crash, right? And then it came down, consolidate, release, consolidate, release. Okay, it looks like some sort of an EKG monitor or heart monitor for the stock market, And so we have been consolidating since the COVID lows, right, where we spiked up here. And was this an all-time high? I think this the 08 crash was a little higher, but we got pretty high here, and since then we've been consolidating. Have we had spikes since then? Absolutely, of course. The market can't go up in a straight line, but generally it's coming down here. And so in the past, I actually want to stick to, let's go to the daily here, and I want to stick to just the current time frame, and then maybe 08, and then maybe the last 2-3 years, right? So we can see back here, after a long period of consolidation, long period, we finally got a big spike, and then we came down here, and you can actually draw a line here, and that's really what happens. When you have this consolidation, this compression, right? Eventually, it has to release, and that's what happened. And this was the fall Q4 2018 bear market, where we did get to just under 20%. So you can't really call it a bear market before we turned around. And then again, after that, we had a number of minor pullbacks. So you go from the top. You can draw it however you want, to be honest, because it's a little tricky with this, but generally what happens is price compresses. Notice we had a little bit of a divergence here, and then we moved higher. Same thing here. Right, so it's wedges, right? The VIX is just a big bunch of wedges, and then the same thing here. This one was a little bit more clear, actually, if you notice here. Came like this, and then what happened here, this is interestingly enough, is that, we broke out above it, but then we pulled back, and then we continued higher, right? So this was kind of this is a little more powerful because you kind of have like a move, a break of the line, a check back, and then a continuation higher. But then what you can do is you can actually take the entire move, right? So if you remove this, if you remove all these lines, you can take the entire move from 2018, that big explosion there, and you can do this, and you can pull it down to this, right? And notice, like, this is actually pretty clear, right? So you have this touch here, you have this touch here, and what I really like about this is that this was a gap, right? So it hit here, found some resistance, and then it found resistance again, but then as soon as we got that gap, that was pretty much all she wrote, right? Now, where are we in our current move? Well, we just take a look at this now. It's a bit of a bigger structure, obviously, but you can generally draw a line going here, right? And basically, we can assume that the next big move higher in the VIX should be whatever breaks this resistance, and that would be the next move lower in the S&P 500. Now, while some might look at this and say it appears as though we are getting ready to break through this, if we draw this line, look, this goes well into 2022, right? So, I mean, you can, there's nothing that says that this can't continue lower this way, right? Well, I mean, historically, the lowest we've gone on the VIX has been 8.5 back here, but this can kind of continue for some time. So I would not be surprised if the market remains buoyant for some time, even if we do get some pullback along the way, as we have had since the lows, right? But if you take a look at the big picture, let me just take a look at the weekly, you can see that every few years, every couple of years, with small exception, we had this big period here where we didn't get much, but then we got a big move here, and then we had this period here where we didn't get much, but then we had a big move here. If we continue to consolidate here, you want to keep an eye on this wedge in terms of potential for the market to kind of turn around at this stage. So that's the VIX, just providing some context. Now onto the main event. Now, I did say that I would give you a target for the S&P 500. And that is true in a way, but it's also not true. I don't want to give you a number. Okay, I will give you an indicator. In Friday's video, I said, let's take a look at this elevated red reading that we have here on the DMI with rising black and falling green. Notice that in previous large bullish thrust, like this is a big bullish thrust, and this was a big bullish thrust, the market peaked well after red started to fall. You see this here? Even here? And black had peaked, right? So you can see here, red is falling, black is peaking, and yet the market continues to move higher. Same thing here. Red is falling, black is peaking, while black peaked here, but the market continued to move higher before this major pullback. Now, black's peak was the top in this thrust, and we did have a lot of volatility because look at how high red got. I think this was just an absolute blow off. But again, we notice that we are in a similar move with red rising and black rising. And so if I stick with my methodology, I have to accept or admit that we are not yet close to a top for this market. Now, I don't know exactly what it will look like, but using these indicators from past moves that looked like this, we had to wait for red to move higher and for black to move higher as well. We're still just getting there, right? Now, green is low, I'll admit, right? But look, green was low here, and it continued higher. So generally, the indicator that I use, that I believe in, tells me that we still have quite a ways to go before this bull market is over. Now, remember, we are using the monthly, and we did have a pullback in March and April, right? Our analog, that's the one that we use. If we look at the monthly chart, it doesn't even register, right? So if you are a big picture guy who can ride out the volatility, then you probably only want to pay attention to this indicator right here and wait for that to peak, right? That is when I think we could expect the next structural correction, or even possibly a complete market top. And I only say that because interest rates continue to rise, as does inflation. In the past, when that happens, yes, we get an acceleration of a market into a blow-off, but it usually also signals the end, right? But I don't want to get into that right now. But again, I have to emphasize that we only have these two samples, limited sample sizes, which in statistics is not a big, it's not a big sample size to have only two, but it's all we have. So if we are to make reasonable inferences, then that is our overall constraint. And again, I could always be wrong, right? I'm presenting an argument with supporting evidence. I would love to hear a counter argument in the comments. If not, then you gotta like this video and you gotta subscribe. I will post only on Wednesday, and then again maybe next Friday or next weekend, especially if the near-term analog does play out, because that means that we've got to get ready for a very, very interesting end of November and beginning of December. So thanks again for watching, guys. This one was a bit longer, but remember to like and subscribe. Make money this week and enjoy your holidays. To my US viewers, I'll see you on the next one. Cheers, guys.